Hey guys, welcome back to Why We Are Capital. Thank you for joining me. Today, I'm going to dissect the third quarter earnings of Snapchat. It's going to be super fun because there's a lot of gold in it and how you can make money. So, before we begin, the three takeaways I want you to get ahead. I'm going to give you the cake off the bat. So, if you don't have time, at least you walk away from this video with three things that you need to know now. One is Snapchat is not period not going to be profitable in 2019, whatever they say, whatever Elon say. Okay, daily active users have peaked for them, so the market segment that they are operating in is at static at best and contracting in actuality. So what they're doing is they're kind of showing how they're going to make profit. Well, it's in the short term financial gimmickry. So basically, they're lowering market cost to increase margin now, but that's what's going to cause revenue and users to decline in 2019. So there is no way they're going to be cash flow positive in 2019. So with that said, let's dissect into the Q3 earnings and what you should do and learn, and if you're in the market, how you can make money. So we put our money behind the analysis. So one of the comments I got, a couple of them actually, was that, hey Brian, you give all this good analysis on your channel. Like, do you actually follow through? What do you do with it? So we are a venture capital company, but the thing is, I worked on JP Morgan, and I worked at Facebook, and I worked at Google. So I know finance, I know venture capital, I know technology. Not to brag my own dude, but just giving you perspective of where I'm coming from. So yes, I do follow my own advice, and just to give you an example of how we can make money. So I am negative on Facebook, I'm negative on Snapchat because I go through the numbers and I'm here to give you the truth, the real numbers, not the marketing crap you get out there from CNBC or Bloomberg. So as you can see, I opened two puts, one in September and one in October. And as you can see, uh, I'm up 29% and 26%. So yes, I put my money behind my analysis and I make a lot of money. So if you're just cruising by, take this information, take it with a grain of salt. Again, you can lose your capital. So this is not investment advice. Consider, talk to your broker, talk to whoever you need to talk to. It's your money, but I'm giving you the fundamental analysis, and it's usually bang on targets, but no 100% guarantees. All right, so let's look at Snapchat. So the story is that Elon is spinning is that they're going to be cash flow positive and they're going to be profitable by next year. Well, let's see. As you can see, they've been burning money, and yes, the burn rate has gone down. But if you look at it, why it's going down, first story is the revenue. So as you can see, revenue is peaked. So yes, year on year they can show growth, but if the more important story is quarter on quarter, because as you can understand, social media is a very volatile and a very fast changing market. So your North America revenue has peaked, your Europe revenue has peaked, and rest of the world is crap. So with that said, yes, you can see quarter on quarter growth, 43%, but let me go and dissect those numbers for you. So the main drivers of revenue and everything in social media is your DAU, your daily active users. So year on year, from Q3 last year to Q3 this year, it's only a 5% growth. From last quarter, they actually lost daily active users. So if your users are losing your platform, then that means that your future earnings is going to go down, your future revenue is going to go down. The same story is with North America, the same story is with Europe, the same story is rest of the world. And it is scary because rest of the world has not been penetrated by social media. And if you're losing there, that means your platform is losing its core appeal to the market itself. So that's why Snapchat, at least for the next 1 year, is going to be a toilet shit. So, but we're making money, Brian. What you talking about? So, the way ARPU is being designed, both you're gonna listen to my Facebook analysis too. Same thing is happening. It is squeezing more revenue out of each users. So they're pushing more ads, and that is one of the thing that happens in social media is that if your user experience on your platform becomes too cumbersome, then your users start to leave. And that's what's exactly happening with Snapchat, is that they're pushing too much ads on them, trying to monetize too much out of the customer, and that's causing the user experience to diminish, and therefore the platform is being abandoned by, at first, the less sticky users, the new users, and then the old diehard who have a network effect. So let's see, break down the cost of revenue. So basically that's basically your cost. So as you can see, your gross margin is climbing up steadily. Okay, infrastructure cost has flattened out. So basically they're no longer, in the past 1 year, investing in their in their in their platform infrastructure. So it's flatlined, so they're just trying to maintain it. Revenue cost share, they're paying out more, and others is SG&A. So basically what the story this slide is telling you is that it's taking them more to keep and acquire a customer and run their business, and they are not investing in their future. So operating expenses is going down. So wow, this is it. Like, they are doing such a great job, according to them, that the operating expense is going down. No, no, no. If you look on the right side, the main thing that you need to notice is that the sales and marketing has been cut dramatically. Okay, so your R&D expense, your quota expense is staying the same, basically in line with your infrastructure cost that you saw. So that basically means that you just have enough developers to keep the infrastructure going, to keep the platform going. There's no growth there, so there's no new products coming out. Okay, your sales and marketing you have cut dramatically to improve your operating expense. That means that moving forward 2019 you're going to have less revenue, because the thing is, it's all about the funnel. So marketing creates like number of advertisers out there, sales closes the deal, and and the circle of life goes on. But once you start cutting down marketing, then you're cutting down your future prospective sales. So yes, in the short term, yes, you can show margin expense is increasing, but in the long term you're going to lose out on revenue. So next year in Q1 2019 you're going to see a revenue drop, and that's going to be because of the decision they made in Q3. Okay, you heard it here first. So EBITDA, not much to talk about. Yes, the trend line is there. The way they're massaging these numbers is to show that Snapchat is going to be profitable, but as you will see in Q1 there's going to be a revenue miss. So the outlook is revenue is going to be around, for next quarter, 350, 380, EBITDA minus 100. With current cash flow, I don't think they're going to be profitable anytime soon. So what does it all mean for you guys? It is means that you should sell your stock now, because as you can see from the puts we've created, there are puts out there for $3. So people like me are expecting it to go down to $3. We already made 25%. If it goes down $3, I'm gonna make like 1,000%, right? So when that happens, I will definitely let you know. But thank you for watching and hope you found this useful. So please subscribe. Let me know in the comments what else do you want, and have a great day and take care.